Order, and we'll start with review of the minutes from the last meeting. In your packet, do we have any corrections or additions to be made? If not, can we have a motion to approve?
Motion.
With second?
Second.
Voting, starting with Clay.
Yes. 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 Yes.
Yes. All right. In your packet, you have the copy of the report on the military buyback, 2 individuals. Treasurer's report, Mr. Eric.
In June, the disbursements, there was 1 drop payment, there was 5 refunds and 2 bills in June. Receipts, the drawdown was $130,000 in June to cover the payroll. I'm estimating $100,000 for the month of July. That's good with, that's all for the treasury report. You wanna do the bills also?
Yes, sir, go ahead.
There's 4 bills this month, the Rosen Harwood, Yeager and Christian, the car rigs, it's the audit progress, and then Kavanaugh McDonald, the valuation report, that hopefully will be done in the next week or 2, and the GASB 67. And all those numbers are within the contracts.
Do you have any questions for Eric? I know he loves questions. All right, do we have a motion to approve bills?
Motion.
Have a second?
Second.
Voting, starting with Clay.
Yes. 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 Yes.
Yes. Morgan Stanley.
Good morning.
Morning.
Well, handed out the package, just a couple of comments on the markets. We actually finished up the first half of the year, it's one of the best years, or first halves we've seen in a long time. And it's kind of one of those things that, you know, we're dealing with Goldilocks, we're, you know, going through the 3 bears and checking out all the bets and you know, the first one not so much, the second one, oh, this is just right. So really that's kind of the way the investors have shook off a lot of the resiliency of the markets. Let me get you, sorry. And so the challenge that we as investors are dealing with is okay, is it different this time? Right, that's always the question, and that's the narrative right now, is that, hey, it's different this time. I will say that we are in the earnings recession. At the same time, I will say that markets have kind of just disregarded it. It's different this time. So I think with that perspective, you know, we're still long-term investors. Talked about that as a policy with this pension board, whether it be market timers or long-term investors. And so we are still invested with significant cash on the sideline, which is earning over 5%. So coming off this fantastic first half, if you will, as we've seen in a little bit, we truly have not seen a follow-up to that, that's been positive. Usually when we have this kind of market experience, we're followed up by a flat or down markets in the back half of the year.
Thank you.
So with that said, I'll turn our guidance to the report, just to kind of give us an update. And we have the market summary is listed here. As you can see, we currently have about 8% of the portfolio in a money market. It's about 5.5%, or excuse me, 5.2%. You can see the returns even this year, through half the year is tracking over 5. We can see if you go from the very bottom of the page, the total fund line, and go over to the monthly returns, we're up 3.85%, or almost $2.5 million and the cumulative year-to-date return is 9.62. The majority of that's coming in the U.S. growth sector. If you go to the page on the cumulative year-to-date, Vulcan's up 25, which again, we feel like their name is not really, it's kind of misleading. They're really more of a course type investment. And then we've got value stocks up about 8%, followed by your growth portfolio, U.S. large cap growth portfolio up 26%. Your small and mid caps are mid to higher single digits, and then your international, which has been a nice.
Hang on one second, Edward. We're live on Facebook.